see, are we on the dot 6:30? So we're going to kick off. I'm sure we might have some more people joining us. Welcome to everybody here. I see it was Matt. I wanted to say hi to the other.
How's it going?
Hi, Matt. Any other picture on the screen? Welcome. Your cameras on, off, whatever makes you comfortable. We also, I think, for housekeeping, maybe best to keep it on mute.
Don't worry, I'll put them up.
Make sure that everybody can get the benefit of the information being shared tonight. But first and foremost, welcome. Thank you for offering up your time to be with us tonight. We're far more likely to have welcomed you at the Houghton Country Club and shared some space, but no, yeah, lockdown and all, we're not going to be locked down. We're going to keep going. So hopefully sometime down the line in this year, we will still have the opportunity to have you as our guests in that beautiful setting and venue with our products on display where you can actually physically see them. Tonight we'll have to show you pictures, but we trust that that will still serve its purpose, and that is to bring you critical information for where we are at tonight. So on that note, DCX Bullion is a bullion supplier. So I have to give you a bit of a disclaimer here. We're not financial services providers. So what we are sharing with you tonight is not financial advice. In fact, it's a culmination of extensive research and collation of expert opinions and stats from across the world, with experts sharing their insight and forecast on where we're at. And we firmly believe that there is a way to build generational wealth through commodities. So it's and that's what we want to share with you tonight. I believe we're in for a treat. So let's have a look at what our agenda looks like. We're going to cover the complexities of the current economic conditions, both globally and locally. And then we're going to look at the trends in the commodity market and why we say that there are investment opportunities within commodities at this stage and what it means for you, for us as South Africans particularly. So we'll have a look at the DCX Bullion products. And as I said, we're a retailer and supplier of physical, tangible bullion. But what gives us our edge is the services that's wrapped around it, and in particularly the logistics services. And we have with us in the house, and I just came on screen, Wayne, welcome, our partners from Fidelity. So we partnered with Fidelity Security Group to make sure that you as the customer can get your physical bullion, gold, silver, whatever it might be, physically in your hand, safe and secure, or either that or vaulted in some of the Fidelity world-class secure vaults and under their watchful eye. So that would, it's very exciting. So we'll share a bit more of that. And then we'll make some time for questions and answers right at the end. So I want to ask you on that point, if we can leave questions to right at the end, because often we find that maybe a question and that could be answered in the next slide or two. But please make notes. I think we're having very valuable information come your way, so please make notes, note your questions, and we'll address it at the end. So the reality is we are facing an absolute storm. I don't think anybody can deny that. COVID-19 expedited it, but technically speaking, we were in a crisis already with sovereign debt across the world. And we can't deny it. We can't avoid it. The storm is here. We're in the midst of it. Now it is, how do we get through it? What is there a lifeboat? Is there an umbrella? Is there a way for you and your family to get through on the other side intact, or maybe even better off? And that's what we will be discussing tonight. So our speaker for this evening is our own in-house expert, Mr. Dion Rebello. He has 20 years of expertise and experience within the mining and manufacturing sector, and has a wealth of knowledge that he can share with you tonight and information to help you make an informed decision as you walk into this storm. And as I said, we also collected a lot of stats and data from international experts. So before I hand over to Dion, we're going to kick off with a short video clip. Just turn up your sound a little bit, but it's from an international expert, Mr. Mike Maloney, who's well known in the bullion commodities sector across the world. And let's see what he has to say about the storm that I keep referring to.
We are entering a period of financial crisis that is the greatest the world has ever known. The wealth transfer that will take place during this decade is the greatest wealth transfer in history. Wealth is never destroyed, it is merely transferred, and that means that on the opposite side of every crisis there is an opportunity. The great news is that all you have to do to turn this crisis into your great opportunity is to educate yourself. I believe that the best investment that you can make in your lifetime is your own education. Education on the history of money, education on finance, education on how the global economy works, education on how all of these guys, the central bankers, the stock market, how they can cheat you, how they can scam you. If you learn what is going on and how the financial world works, you can put yourself on the correct side of this wealth transfer. Winston Churchill once said that the further you look into the past, the further that you can see into the future. This program is all about creating your own crystal ball, being able to gaze into the future, being able to change this crisis, the greatest crisis in the history of mankind, into your great opportunity.
Good evening, everybody. As Ilse had mentioned, my name is Dion Rapello. Yeah, so just a brief summary of what he is actually talking about. And interesting enough, that video was actually shot probably around 2007, so just before the 2008 financial crisis. And he saw something, and of course he speaks and he uses a Winston Churchill quote where Winston Churchill said, "The further you look back into history, the more you see the future of where things are going." And, you know, he is talking about that during these times of major downturns and economic difficulties, there's always opportunities. And it's a matter of being on the right side of that wealth transfer that is the key and the secret to actually making sure that you can benefit from times like these. I know that a lot of what we're going to discuss, especially in this first section, is actually quite jarring because it's a lot of facts, and we, as Ilse said, we stick to everything that we have. Is you can back it up with facts that are available online, and we double check everything to make sure that what we're giving you is the latest, best information. But you know, with every downturns, and these are literally over the last 50 years, we've experienced, there are always job losses, there's low wages, and a decline in real income. In the COVID-19 crisis, which was originally known as the everything bubble, you know, there was a belief that things would be better. And as soon as we went into COVID-19, literally this everything bubble became the COVID-19 crisis. And of course, that started to accelerate to proportions that have never seen before. But it's within these crises that there are opportunities. And tonight, this is what this is all about, is those opportunities. So if we look at this image here, and you'll see the small blue dot, dark blue dot, is from the financial crisis of 2008. And the light blue dot behind per country, and you can see the top left is Germany, and all the way down to the bottom right, which is Brazil. South Africa is second from the bottom. And the light blue is all the stimulus that has been pushed into the global economies since 2019, since COVID started. And the important thing here, and you know, if we look at economic stimulus packages, government's way of keeping people employed and making sure that the consuming is necessary in a crisis, but it means governments will need to take significant debt burdens. You know, if we look here in June of 2020, governments allocated over $10 billion for economic stimulus in just 2 months. In February of this year, another $24 billion was pushed into the economies globally to support the rollout of vaccines and to make sure that we were able to transition through this period, which we are still in. But you know, I want to also now take it a little bit further, and we're going to look at this number. And what's interesting is when I actually did this presentation at Houghton in December, the figure was around 61. But now I'm going to actually read out this number because it's quite a sizable number. And, you know, I could always refer to someone that has a classic line saying, listen carefully, and the wiggle. But I'm going to read it out, and I'm going to tell you exactly what that is. That's 80 trillion, 358 billion, 849 million, $91,037. The global debt to GDP ratio surged by 35%, which is over 355% of GDP in 2020. The upswing was well beyond the rise seen during the 2008 and 9 global financial crisis, when the increases in global debt ratio is limited to 10% and 15% respectively. The point being that public debt has increased across the world, and we are experiencing it. So now I'm going to actually just really explain something, because we hear this million, billion, trillion, and how can we understand the differences? So we're using time as the example, and this is actually quite interesting. So if we had to express this in time, a million seconds is equivalent to 12 days. A billion seconds is equivalent to 32 years. Notice that jump from 12 days to 32 years. A trillion seconds is equal to 31,688 years. So we're not even, none of us will even see a trillion seconds. In fact, I don't think the next couple of generations of people will actually experience a trillion seconds. But, you know, I just want to bring this now closer to home, and we're going to go into a lot of the South African economy because we know it's relevant to everyone that's on the call tonight. And it's important, and as I said earlier, we want you to know and understand this information, not to scare you, but to empower you, because information truly does mean power. So we look at the debt in relation to GDP. Why is the percentage important? Some economists argue that the negative effects of economic growth begin as soon as the national debt reaches 60% of GDP in developing and emerging economies and 80% in developed nations. Currently, and we are a developing and emerging economy, we are heading for 90%. You know, when we originally did this presentation in December, the projections were around 66% while they projected, and we hit 83. So we can see that there's a definite upward swing trend right now. Debt is not included. The debt that's not included in this national debt are guarantees on loans taken out by state-owned enterprises, the Eskoms, the SAAs of this world. How many times through the last 20 odd years have we bailed out SAA, Eskom? All these companies have taken on more money from government, and they bailed out, and a couple of years later, they back with their begging bowls for more money. So things are clearly not working. Obligations to government through the employees' pension funds, and day-to-day debts of government departments, agencies that are presented by unpaid invoices. The hidden debts are worrying because they're off-budget debts and have been the downfall of many nations, particularly those in emerging economies, and this is where we fall in. South Africa's national debt could easily become unmanageable, and probably is right now. And this continues as government continues to borrow more money. So we're going to go straight to the man who's in the big chair and probably one of the most important people. And, you know, Tito Mboweni, who is our South African Minister of Finance, he's been quite damning on the current status of our economy. And he's been one of the key drivers to say, we've got to turn things around or we are going to go into serious trouble. And during his 2020 medium-term budget policy statement in October of last year, Minister Mboweni warned that South Africa is borrowing at a rate of 21 billion rand a day. This equates to 21 cents out of every rand that government earns goes towards servicing the interest of those payments. And that is concerning. But, you know, as I said, we're talking South Africa. We make sure that we're looking at people that are reputable. Now, Martin Ackerman, who's the chief economist and the advisory partner for Citadel, And he said this in January of this year, that even before COVID-19 hit, and I spoke about the everything bubble, South Africa had traveled a long way down the road towards a fiscal cliff. On the back of unsustainable and unhealthy government budget, the pandemic simply has accelerated the journey to this purposes. So what does that mean? If we look at a fiscal cliff, it's the point where civil service remuneration, social assistance payments, and debt service costs will all be absorbed with government revenue. In other words, an environment in which in low growth, non-existent, but at the same time, government spending continues to rise. And we see this happening all the time. You know, in closing from the statement that Martin Ackerman had made, if we are to avoid a sovereign debt crisis or the risk of defaulting on our loans, government will urgently need to implement long-awaited structural economic reforms, and markets will be watching for evidence or of action rather than simply talk shop over the next 12 months. That's critical. But you know, I'm going to take this down and we're going to go a little bit further into the current South African picture. So currently we've entered into our third wave within the COVID-19 infections. National debt to ratio has increased from 62% in 2019 to 83% currently. Budget deficit has doubled since 2020 budget review. Debt service costs are now at the largest growing expenditure item in the budget. And public service compensation absorbs 47% of revenue for 2020-21 budget year. The economy contracted by 7.2%, with an expectation to grow at 3.3 in 2021 this year, and 2.2 in 2022, and concerningly, in 2023, 1.6%. But you know, there has to be some good news. You know, we can't also just look at the bad side, but let's unpack the good news side of things right now. The rand has strengthened, and I mean, you know, we from April last year, where the rand went to a height of just over 19 rand to the dollar, and the massive pullback that's happened. But what has caused that? The higher interest rates attracted offshore investments and capital, which in turn has helped strengthen the country's exchange rate, offering 10-year bonds at 9% versus 2% in the US. So absolutely, we are attractive at our bond yield rates, and of course, we've been attracting a lot of foreign income. If I look at the stronger than expected tax income, and this is mainly thanks to the mining houses. And, you know, if we consider that that has been always the backbone of our economy, and even now, that is one of the main reasons. Commodity prices have been lifted to record highs. We saw gold spike to a height in August last year when it went over $2,000 an ounce. And this is also based on strong demand from China, the US, and the European powerhouses embarking on massive structural projects to stimulate coronavirus-hit economies. Rallying commodity prices also have bolstered the country's exports. And this is the first time that we've had a trade surplus since 2002. That's great news. But let's take it further. You know, as I mentioned, Tito Mboweni is probably instrumental in being one of the biggest drivers of South Africa for us to turn this around. So they've implemented a three-year strategy. And we have to stick to the strategy 100% to avoid a fiscal cliff or a sovereign debt default. So let's unpack this. Firstly, we need to stabilize the debt to GDP ratio from 88.9% of GDP by 2025-2026. We need to narrow the budget deficit from 14% of GDP currently in 2020-21 to 6.3 by 2023-2024. We need a successful 9 billion COVID-19 vaccine rollout. And cutting spending is also aimed at stabilizing the debt to GDP ratio and narrowing the budget deficit. The biggest contributing factor to this is realizing this plan is reducing expenditure of the civil service wage bill, which with 300 billion over the next 3 years, and by implementing a 3-year wage freeze. These are very important things that we need to consider if we are to actually meet these targets and objectives. So I go back to this, and remember, if we look at the slide here, it was very important that we need to stabilize the GDP ratio, debt to GDP ratio at 88.9. Already, we are projecting by 2022, 90%. So we can see that, are we going to be achieving this or are we not? So if we go now and we look within the economy and we just see, we took these over the last 6 months, and these are important because they really relate to exactly what that 3-year strategy is based on. And straight away, in February this year, public sector wage negotiations are accounting for 270 billion of the 300 billion reduction in primary expenditures. If we look here, public sector unions, and we know how they've been instrumental in this country from even during the new South Africa. And, you know, they've vowed to shut the country down, and after rejecting a 1.5% offer. If we look at this, and this was Tito Mboweni in May this year, where he said, you know, the economic recovery will remain elusive as long as incompetent administrations and poor financial management at municipalities is remained unresolved. And these are concerning things. And again, we go here, the unemployment rate, which is increased to a record 32.6% in the first quarter of 2021. This highlights the need for economic reforms, but we know that the real unemployment rate is around 46%. So what happens if we don't meet those objectives? And what happens if we do end up defaulting? The first thing that is likely to happen is the currency will be devalued. Of last year in 2020, 6 countries defaulted. We're going to use Argentina for the example this evening. And I'm going to just give a quote from Maurice Oosthuizen, who's an economics and leadership expert at the University of Pretoria's Gordon Institute of Business Science. And Marius put it very clearly, and I actually quite like this because it really sums up everything that we need to consider here. The first thing that needs to happen, the first thing that happened to Argentina going through a fiscal crisis is the country is not creating enough revenue to sustain its spending. This sounds similar to where we are. The first fiscal crisis, that fiscal crisis perpetuates a crisis in the financial markets. Then the fear and the uncertainty in the financial markets leads to a wave of disinvestment or divestment. It leads to a run on the currency. And if you look, in January of 2020, the peso was 59 pesos to the dollar. Currently, and this is in July of this year, the peso went up to 95.79 pesos to the dollar. So literally over the last 18 months, Argentina has lost half its value in its currency. And we know this. I mean, when the rand went to 19 rand to the dollar, it changes everything as far as what we receive as far as bringing in things. It becomes far more expensive. And our rand then starts to suffer on our buying power. The second point that you raised here, and this is also very important, the weakening of the currency very often leads to a fundamental step down in the economic value of that economy. Costs go up, inflation rises, confidence is damaged for the long period of time. Now, South Africa has been flirting with the scenario for a number of years. And to say, are we in a financial sovereign default? And the reality is not, are we? It's a matter of when this will happen. We've seen successive downgrades by the rating agencies pointing to these obvious problems, that we are not sustaining our deficits. We're not growing our revenue base. We're not reining in the public spending. We're not curtailing corruption in the public sector. We're not improving business confidence to see investment return, which would drive growth. Underlying all of that, we have rising unemployment levels that leads to social uncertainty, pressures on political system. And so if South Africa does not begin to address these issues, we start to see a scenario in a year or 2 or 3 where we will fairly be in a position to avoid or become unavoidable a sovereign default. And these are concerning times. And as I said, why we're raising all of this is we need people to realize where we are. So when you hear that the Rand is doing well, you know, it's almost, it allows people to believe, oh, the economy's fine, everything's fine. You know, I use the analogy, and it's, you know, the visual thing of it is, you know, when they put a frog in water and they start to slowly bring up the heat of that water, the frog doesn't jump out. And by the time the frog realizes that the water's too hot and is boiling, it's too late. And that analogy can be very much related to where we are as a country. So if I just want to, sorry. So, you know, we talk about the declining purchasing power, and we know inflation is the silent killer. And, you know, inflation is an economic term that refers to the rising of prices of goods and services in an economy. You can see from this image, I mean, we take it back from 1991 right through to 2021. And of course, you can see our buying power has decreased significantly. And, you know, even on the last image where it's a single trolley, and we can all experience the difference, what things cost us last year to what it's costing now. And we're not walking out with trolleys anymore. We're walking out with bags to the same value what we were spending a year ago. But, you know, I'm talking about the Rand, and of course we are highlighting fiat currencies, and we need to understand what that is. And, you know, we look at the dollar, which is probably the major currency in the world used for exchange throughout the world. And the dollar's been in inception since 1913. And if you look at this image, I mean, the loss of the dollar's buying power from 1913 all the way through to now. So what $100 would have bought you in 1913 to what it's buying you now. And I mean, I know we've experienced this in our lifetimes, what we'd pay for a car 20 years ago to what we're paying now. I mean, some cars are more expensive than houses that we would have paid for 10 years ago. I'm going to go back to Martin Ackerman, and this is actually one of the best quotes that we actually found. And why it's so important is he raises a very, very important thing. And of course, you know, he is a chief economist and advisory partner at Citadel, and they're in the business of investments. You know, so a lot of the things I'd say would always be tied to what they're selling. And of course, that makes sense. But here he raises something very important. The dilemma for many long-term investors and those investing towards their retirement is that there are those seeking a low-risk portfolio would previously have opted for cash and bonds. The reality, will now grow poorer by the minute they place their money in these types of investments. Investors and wealth managers now need to look for suitable safe haven alternatives to cash. That is the key point here. These may include assets such as the Swiss franc, the Japanese yen, gold, silver, and palladium also present attractive alternatives. So, you know, we've been through all this and you've seen the enormity of where we are. But as I said, this is about information and this is about empowering. And we do believe that commodities do bring a silver lining. And we're really now going to go into that part of the presentation. So if we look here, and this is the average lifespan of a fiat currency versus gold. And generally a fiat currency has a lifespan of about 27 years. And of course, we know gold and bullion has been around as long as we've been trading. And so we can say for the last 5,000 years, easily the world has used and utilized bullion as a form of monetary exchange. You know, this is just a diagram showing gold and silver derive their value through their scarcity. Now, precious metals can't be created out of thin air and derive a value from their scarcity. For every 1 ounce of gold minted in the US, the Fed adds $4 million into their money supply chain. So think about that. A 1 ounce of gold creates $4 million of circulation currency in the US. That's concerning. And we go into the dollar again. And for me, this is one of the most fundamental slides that you consider that in 2020, 21% of all the dollars ever printed were printed last year. So we're saying from 1913 up to now, 21% were printed in 1 year. We understand, we saw that from the massive stimulus packages, be it in the US, throughout the world, that the governments have been pumping into the economies to lift them. But we do know that this creates a bubble. And, you know, there is expectation and there's a belief that we are in for a major market correction or crash in, some say, in the next coming months to the next coming years. Will it happen? Won't it happen? You know, the Fed has a very clear strategy on how they are dealing with this. And of course, they are just flooding dollars into their economy. But something has to give at some point. But this is why we're here tonight. And this is very important. In times of crisis, and this has always been the case, people tend to turn to gold. So I'm going to go into the gold part of our bullion offering. And just very briefly, you know, if we look over the last 50 years, gold has expanded more than 46 times with a compound annual growth rate of around 8%. If you look at the actual diagram, and you can see we go right back from before 1920, you see the Great Depression. All the gray bars down are either depressions or recessions. The thicker the bar, the greater that recession period. The second one you see was when Richard Nixon removed the dollar from the gold standard. And of course, then the last one there was the 2008 economic crisis. But I'm also going to just go into where gold has been over the last 20 odd years. And as you can see on the left-hand side is the gold price performance. And this is what we're talking about, that when the rand loses value to the dollar, that's where, as South Africans, we have a massive, massive opportunity. You can see from the 10 years difference between the dollar percentage versus the rand percentage, and they are significantly different. And that's also why bullion is a definite vehicle to be carrying some of your wealth. So I'm not going to go into the technical aspects of a lot of the graphs. I just want to keep it as simple as possible because we've got a lot to really unpack tonight. But as you can see, this graph is basically from pre-2008, and you can see gold had peaked out just over $40 an ounce, and there was a correction where it dipped down through to about 2015, and then went up to where we are now, and it spiked in August last year where it went over $30 an ounce, retracted towards December, and then in late January, early February this year, it went back to over $30 an ounce. But I'm going to explain that part because that's a new trend that's come into it. But what's important here is you can see that that is a cup formation. So within trading, that whole raise, dip, and then raise is a full cycle of a commodity or of an investment within a stock exchange. So the important thing is, as we can see, gold has fulfilled a full cycle and is now about to go on to its next cycle. So if we look here, and this is where we currently are, we've been running down a bull flag channel breakout. And basically what that's saying is there's a slow build up and a slow running literally laterally, and it's moving laterally down and slightly up, but it's staying within a certain bracket. And now around May this year, there was the first signs of a breakout. So what it's saying to us is that the expectation is we can start to see gold starting to rise and start to push towards 2000. And, you know, at DCX at the beginning of the year, when we released our 2001 report, we gave a prediction of around gold for about $2,300 an ounce. And we're pretty much there. And I do believe it should finish there and thereabout by the end of the year. If we look at the 25 and 2020-30, again, we know that there are some people, economists and big role players within the sector that are saying that gold could go to a value of about $10,000 an ounce. But, you know, I don't believe we need to chase the big numbers. We need to be realistic. We need to make sure what is out there is going to be where it should be going. And based on the information I've given you, based on the quantitative easing, these numbers are not unrealistic. So I'm going to go into just our whole gold offering. And what is exciting is if you look at this, from the left-hand side, we've got a 32-ounce gold medallion, which is about that size. It's a kilogram of gold. So it's about 850,000 rands worth of your wealth. Right down to a tenth of an ounce, which is about 2.3 grams of gold. As you can see, the 1 and 2 ounces are the same size as this is a silver Krugerrand, but it's the same size as one of these. So what you can see there, and why I actually wanted to put a Krugerrand there, is because people love Krugerrands. And as you can see, I've got Krugerrands. You know, and the great thing with this, and for me, the value on these is personal. So I bought one, I got one with the year that my daughter was born. And for me, that's the only real value. Now, people swear by Krugerrands and they say that there's massive value in them. And I've known people that have bought half ounce proof Krugerrands to the same value as what you'd buy one of these 1 ounce gold medallions. So what is the difference between a medallion and a Krugerrand? And it's very simple. A medallion falls into the same category class as collector coins and jewelry. So what it means is there is no legislation holding you or allowing you to take a whole lot of 1 ounces, which are currently valued at about 28,000 Rand an ounce right now. And I can put them in my pocket and I can leave this country and no one can stop me. With a Krugerrand, it is legal tender, and people forget this. It's the same thing as a note in your wallet. It doesn't belong to you. Yes, you bought it, but it still belongs to the government. And I'm not saying they're bad, but I'm saying make a decision on where you need to put your wealth. And if you're putting it in vehicles that have those kind of pullbacks, they're not wise in the long term. So, you know, that is the full gold offering. And again, you know, you do get small gold bars. As soon as they go into gold bars, they need to be serialized. And again, they're not a good form of investment. We're offering, as we said, a full broad spectrum here where we can have people buying small grammages all the way through to a full kilogram of gold. And the amazing thing is, when you hold that kilogram of gold in your hand in the form of a medallion, it is fully legal that you could put that in your pocket, a kilogram of gold, and leave this country and no one can ever stop you because you're fully entitled to that. So now I'm going to go into one of the big stars within our business. And, you know, I was always into gold, and when I first was exposed to silver, I never really took to it until I started to unpack it and see the real value behind it. And that's why we've termed silver the sleeping giant. And why we say that is this, is through economic times of distress, silver follows gold and then outperforms it. Let's look at the historical performance of gold and silver over the last 45 years. I mentioned earlier with that old gold chart over the last century where you saw that in the 70s where Richard Nixon had removed the dollar from the gold standard. And you can see during that period, gold took off and silver was very slow to follow, but then it raced up and outperformed it. Through the 80s and 90s, they literally followed each other. Come 2001, they literally again followed each other, and then again in 2008 when we hit the financial crisis. That period was a 748-day cycle. Gold did exceptionally well. I mean, it did 148% return on investment. Its silver was literally double that. Again, you see it was slow to perform and then it outperformed it. So, you know, if we look at it, silver is a very small market. So small, in fact, that a little money moving in and out of that industry can impact the price at greater degrees than gold. Gold is a far, far bigger market, and we need to know and understand that. But I'm going to go now into the same thing that I did with gold, and this is the current chart from 2009 to present. And as you can see, there was that spike in the around 2011 where it went to over $40 an ounce, and then it came down. And around 2016, it hit a low, and then of March last year, it hit an absolute low of $12 an ounce. Subsequently, it then rallied to August last year where it hit that $30 an ounce, and then there was a bit of lateral movement, and then February this year it went again. As I'd mentioned with gold, there was a correlation. We know they follow each other, but again, for silver, there was a trend that was picked up and a new difference that was coming. And this is one of the exciting parts with this product. As you can see, I've got both the US dollar and the rand performance, and again, investing in commodities, investing in bullion, if you're going to look to invest over a year, you're not going to realize the real value. This is a long play. This is a 5, 7, 10-year play. This is where you look at putting wealth into it over periods of time. And you can see over the longer periods, and you saw the gold, same thing. The real value is over those longer periods where you have those dips and where it will correct itself and then it will go through its peaks. So again, and I'll just show this for the gold one because of that whole cup formation. You can see on the silver, we haven't even come close to reaching the second peak. And if with the peak around 2011 was around $40 an ounce, we know where it's going. So if I go into it, and I'm now going to talk about the Kingelberger-Minsky model of manias and crashes. And this is basically identify stages of a bubble by using elliptical data. 4 stages are recognized, and that's stealth, awareness, mania, and then blow-off phases. So we're going to unpack this a little bit more. And what we've done is we've superimposed both the gold and silver over a period of time. And as you can see, during that period, it went through the stealth phase. That's your smart money. Those are the guys that get in early when the prices are really good and started to realize the value of those early investments very quickly. The awareness phase is your institutional investors, and we're going to go through a couple of those, who those people are. And then, of course, the mania phase is when you get the public interest. That's media attention, that's enthusiasm, that's where people that were not exposed to a certain commodity or stock suddenly start to take a notice of it. And that February moment was one of those key moments where we started to see something happening with silver, which is very interesting. But I'm going to just unpack that. So I spoke about the institutional investors, JP Morgan, and this amount's actually gone up since, where they've invested over 153 million ounces of silver since the last economic collapse. Mike Maloney, we spoke of him earlier, he's a global leader within the bullion sector, and he predicts that silver will reach over $700 an ounce. You know, when I first saw that, I actually questioned it, and I thought it's a bit of a push. Subsequently, I've got a belief, and one of the other guys that's quoted it, where they talk about silver possibly hitting $1,000 an ounce by the end of this decade. And I can see, based on the information we know, that is not far-fetched. If you look where gold was in the early 90s, at around $400 an ounce, if you had said that gold would go to $2,000 an ounce, we've experienced that. So it's not impossible. These things can happen, and quite frankly, they can happen very quickly. Warren Buffett, one of the greatest investors of our time, has also invested over $1 billion US in silver. These are your institutional investors. Robert Kiyosaki, I mean, we know him for his series of books on Rich Dad, Poor Dad, and of course that's all about real estate. And he came out saying that silver is bigger than real estate. So, you know, let's look at some of the things. And again, this is the CIB, which is the Canadian bank. And this metal has a potential to provide investors with more talk, given the relatively small market of silver versus gold. We discussed that earlier. Keith Neumeyer, and this is the CEO of First Majestic. I mean, he came out a couple of years ago, in actually 2017, and said that silver will hit 3 digits. And he was predicting a price of $130 an ounce. And so subsequently, and this was recently, probably about 2 months ago, on one of the stations that he was interviewed on, he said that silver will reach over $1,000 an ounce. And I truly believe that the possibilities are there for it to achieve that. Jeff Clark, who's a senior analyst at goldsilver.com, has again also said that $100 an ounce is a minimum over the next 5 years. And that's very much in line with our projections as well. Again, we bring in Robert Kiyosaki, and he did say, silver is the most undervalued, low-risk, best investment of all asset classes available. Buy stocks, bonds, they are both in bubbles. And that's quite interesting. We spoke of the quantitative easing and what's happening with that. You know, if we look at the projections, and this was part of our 2021 report that was released at the beginning of this year, and we pretty much said that silver will probably surpass $40 an ounce, but there should be a pullback, and it will probably finish off the year probably around $32 to about $35 an ounce, which is still significant considering where it is right now. And you know, the guy here on the left-hand side, which is Stian Jacobsen, he's a chief investment officer of Saxo Bank. And he said something very fundamental at the beginning of this year, where he said, turbocharging the rise in the silver price in 2021, even relative to gold, is the rapid rising demand for silver in industrial applications. And I'm going to go into this. In fact, a real silver supply crunch is on the cards in 2021, and it frustrates a full throttle of political support for solar energy investments under the Biden presidency, the European Green Deal, which is critical, and China's 2016 carbon neutral goal, amongst other initiatives. Silver has price ranges of all-time highs of $50 an ounce within this year. So, you know, we go back to the Kingelberg-Minsky model, and we can see that we've gone through the institutional investors phase. We're now hitting media attention phase. We saw it in February with the Reddit and the Wall Street Bets groups. Suddenly we got a whole new generation of people that knew nothing about silver have been exposed to it. That's what caused that price to spike over $30 an ounce. There's been a massive interest within the silver market, and this is definitely pushing us into that next phase. So we've transitioned through that awareness phase, and we're now going into that mania phase. So the reality is this: the prices of silver will start to go parabolic. And what does make silver different to other commodities? Firstly, silver is the most undervalued commodity on earth. Second to oil, it's the most useful commodity. Silver has the highest heat and electrical conductivity. It's used in most things. I mean, your cell phones, laptops, TVs, major appliances, washing machines, refrigerators, mirrors, medical and dental equipment, green technologies, and I'm going to expand on this a little bit more. Electric car engines, wind turbines, solar panels, all those things require mass amounts of silver. Now we're talking about that trend. Remember, we're going into that new phase. And Elon Musk, who's the CEO and a very, you know, he's a South African boy, is the CEO of Tesla and SpaceX. And, you know, when he started Tesla, he had a goal that he would want to produce 1 million electric cars by 2020. He achieved that of March last year. He achieved that. And he's gone on further to say by 2025, he wants to have 1 million electric cars being produced per annum. He's one manufacturer. We've seen the uptake from all the other major manufacturers throughout the world. And the Silver Institute estimates that the automotive sector will gobble up as much as 90 million ounces of silver annually by 2025. Take note of this, guys. It's so, so important. So, you know, I speak of, and I mentioned in that one slide about the green technology trend. It's actually a mega trend. And why we say this is, you know, if you look at all the other trends, we talk about Bitcoin, which was blockchain technology, was a $3 billion trend. We look at Internet of Things, it's a $212 billion trend. Robotics, $103 billion trend. The green technology trend that we are going into now, which is about carbon neutral, it's about the world moving to better sustainable technologies. And of course, electric falls into that. Of course, solar panels, solar technology falls into that. All of this is the future where we're going. And what's interesting, to put it into perspective, if we'd actually really taken the gold bubble, which is showing the mega trend, which is a $30 trillion trend, that would be literally taking up half this slide in just the bubble itself, and it would literally be half of a circle in relation to the small little dots there. So we're talking billions versus trillions. Why are we getting excited about this green mega trend? If you hold crucial commodities that are supporting this industry in your hand, silver, you are starting to create the supply and demand, and you will then start to be part of this, and that places you in an exceptionally strong position. And again, I just go back to this because it's a lovely expression of understanding what a million, or as we're talking there, billions and trillions. We're not talking 32 years, we're talking 31,000 years. There's a massive difference. So we know there's big, big money that's driving this whole new trend. I'm going to go into this next clip, and this is a video clip on a guy that was out in the streets offering a person a 100-gram silver bar. And it's quite interesting, the ignorance. And I think a lot of people would actually understand where this is coming from.
It's your lucky day today. You win a free 10-ounce silver bar, pure silver bullion, or a free Hershey's king-size chocolate bar.
Take this one.
You'll take the chocolate bar. Who needs a 10-ounce bar of silver, right? No. Have a good day. It's your choice. A free 10-ounce bar of silver bullion or a free king-size Hershey bar.
I think I'll take the Hershey bar.
Go ahead. It's your lucky day. Just fresh out of the refrigerator.
Thank you.
Thank you very much. Who needs a 10-ounce bar of silver when you can have a good, delicious bar of chocolate, right?
Yeah, exactly.
Okay. All right, thank you.
Thank you.
You'd rather have the Hershey bar than the silver bar?
Yes, I would.
Oh, you would? Okay.
Yeah, the Hershey bar, you can eat it, you can eat the silver bar.
Yeah, that's right. You can't eat the silver. What are you going to do with a 10-ounce bar of silver, right? You know. Which one do you want?
Probably the chocolate, because I'm a girl and it's been a cranky day.
Okay, it's yours. Eat it quick because it's getting hot out here.
It's fine.
Just offering people a free Hershey bar today or a free silver bar. Which one would you prefer?
Silver. I'll take the...
Who needs a silver bar? Lucky day today. A free chilled Hershey bar straight out of the fridge or this bar of silver. It's 10 ounces.
What are you guys doing?
Which one do you want?
Well, I don't have any way to do anything with the silver.
Okay, so you'd prefer the Hershey bar?
Yeah, but is it real?
Yes. Just straight out of the fridge.
Doesn't seem real.
The Hershey bar doesn't seem real. I mean, we could go into this coin shop, we could verify the silver bar is real.
No, that's all right.
It's real.
I'll always take chocolate.
Always take chocolate. Enjoy.
Thank you.
You're a winner today. We're offering a free Hershey bar right out of the fridge.
Okay.
Or a free silver bar. It's 10 ounces. It's a little tarnished. Which one do you want?
I don't know. Chocolate bar.
Go ahead.
All right.
It's yours. You're a winner.
Oh, thank you.
You're welcome. Have a good day. You're a winner. You win either a free 10-ounce bar of tarnished old silver bullion or this Hershey bar just out of the fridge.
What's gonna happen?
Which one do you want?
The candy.
Go ahead. It's yours. All right, we got another winner for the Hershey bar giveaway. Thank you.
The gentleman there is offering 10 ounces of silver to a number of people. So I really encourage you to watch it. It's like 3 minutes, and opposed to a Hershey bar. And I'm not going to tell you how many people choose the Hershey bar, but it's actually shocking. And that was done in July 2015. Now, a Hershey bar today is about 22 Rand, if we convert it to Rand, and probably not much more or less than that in 2015. Whereas if you take 10 ounces of silver, it was actually offering people at that stage, it would be in Rand value, 1,835 Rand and 13 cents to be exact, back in 2015. If anybody had chosen that, and he talks about the tarnished old silver bar, if anybody had chosen and dumped it in a drawer, forgot about it, never to look at it again, and happened to find it today and pull that out, that bar would be worth 3,800 Rand. That's more than double But yeah, the video indicates how ignorant people are, not knowing what silver holds and the value that it holds. So yes, we will share that. Apologies for the lack of streaming capability at this stage. But if we continue to the next slide, I think our discussion here tonight is showing you the value of bullion and what it means to hold it in your hand. And that's why we say you can build generational wealth through commodities. It's a long game, like I said. You have to be patient around it. So here's some of our products. Dion has taken you through the gold medallions that we hold and explained why medallions and not bars. But what we're really, really proud of is our silver product range, which is medallions, minted and cast bars, and our flagship and in-house pride, if we can say it, call it that, is our 2 kilogram bar. That's a DCX Bullion initiative, an innovation where we try to curb some of the manufacturing costs so that we can give you more bullion for your buck. And that you get in that 2 kilogram bar. I can promise you there is no other supplier out there that can provide you with that at this stage. The rest of the market might wake up and catch up with us at some point, but at the moment, we are the only ones offering that, and you won't get a better price on the market than what you can hold in that 2 kilogram silver bar. So they, like I said, Houghton would have been nice where we can, and we should stop talking about the should have, could have, but at some point, if we do meet face to face, at some point, we'll have physical product on display. So the thing about DCX Bullion is our full round service offering. It's not just about the bullion, it's also about how to safely, securely get it to you or vault it for you, and also the quality of it. So we've partnered with Global Gold as our manufacturer, which is a manufacturer that's been in the industry for more than 30 years, hold all the required licensing, sources the product directly from Rand Refinery, most reputable source of bullion that you can get in this country. So, and even internationally from international sources. So you can rest assured that the product that you will receive is of the highest quality, investment quality, and the real deal. And then we also have an external auditor, which is an independent party that will validate and verify your bullion held in vaulting. So if you choose to vault your bullion, you also have can get a certificate securing or confirming what is held on your behalf. And then, of course, our logistics and vaulting part is the Fidelity Security Group. And that we are very excited about. That is our niche in the industry, I believe, because through Fidelity's expansive network and secure network, we can bring you your gold or silver physically to your doorstep, or you can have it vaulted in world-class, most secure vaults that you would ever imagine. And we are very glad and fortunate to have Wayne van Wyk with us here. Wayne is the Senior Solutions Architect within the Specialized Services Division in the Fidelity Security Group. He heads up all bespoke specialized projects, and I'm happy to say we are a bespoke specialized project and a first in the market. And we're very, very excited and proud of our exclusivity arrangement with Wayne to bring you bullion to your doorstep. And I'm going to hand over to Wayne to take you through the next slides and give you a little bit of a take on what is Fidelity's role in this context. Thanks. Over to you, Wayne.
Thank you very much, Ilse, and thank you, Dion. Good evening, ladies and gentlemen. Thank you very much for your time. I'm not going to take too much of it. I think they've covered their end of the bargain, so let me cover mine as quickly and as poignantly as possible. You know, when DCX came to us and we started looking at what the possibilities were when we started building this partnership, we realized that we could unlock certainly the first of its kind in South Africa of a secure commerce platform that you could purchase your commodity on, secure your commodity on, and when you need it, have it delivered to your doorstep in a safe and secure manner. Fidelity was very excited when we came across the project. We've subsequently ventured into the secure courier market, which we've successfully rolled out nationwide now. We started with the cell phone industry, which, as you all know, has been a bit of a rough one of late for the courier services. And we've been able to come up with a solution that's not just secured the cell phone industry from further losses, but we've actually found a nice niche way of delivering to your doorstep whatever it is that you require that is of value. So sitting with DCX, we've now come up with a nice commerce model whereby we can secure, we can deliver, and we can move around your bullion at any stage that you are requiring it. Fidelity, luckily, as you'll know, we're the largest integrated securities provider in the Southern Hemisphere. And with our footprint nationally and with our armored abilities within the cash in transit environment, and with our unique partnership that we've developed with Skynet Couriers for a secure courier service, we are more than comfortable in joining DCX in this partnership, in that we can collect, deliver, and secure whatever is important to you. So going forward, you're probably going to see a lot of Fidelity vehicles running around with Skynet logos on it. We've just rolled out nationally. We're very, very excited with that. And what we would like to now see is a lot of Fidelity logos plastered on our vehicles with DCS logos going forward, servicing you with your career needs.
Awesome. Thank you, Wayne. That's
My pleasure.
And I think
Thanks,
for us, the bottom line and the crux was security. How do we ensure that you have your product all the way safe to your doorstep, all vaulted for you, and that includes insurance. So it's a all-round deal, which also brings us back to when the time comes that you need to liquidate or want to liquidate your product, we can facilitate that. So you have a to Z, buy, hold, and sell if you want to. So moving on to that, we have a very, very exciting announcement to make tonight, which actually two very exciting announcements. So when you think about commodities and investing in commodities, people often dismiss it quite quickly because it's seen as a high net worth, high value investment, and the average guy on the street might think, well, I don't have 100,000 or a million or a bar to drop in one go on gold or silver. And we also completely brainwashed with movies full of gold bars. That's always fascinating how people run around with gold bars, and there's no way you can carry that weight around. But people don't consider physical bullion necessarily as something that they, as an average guy on the street, can invest or can hold. Now we created an opportunity that we call the Monthly Medallion Club. And it actually came out of a real life example of one of our most regular and loyal customers it's a little lady out of Langebaan, and she has religiously, without fail, over and over, bought 1 ounce of a silver medallion every month, month upon month, month upon month. So what she's actually put in play is the stacking and accumulation principle, where a little bit continuously adds up to a lot over time. So please, like I said, watch that little Hershey bar video. They were talking about 10 ounces. We think about what 10 ounces are worth now is 3,800 Rand. And it'll take, in a blink of an eye, by putting away or aside a little bit every month, you can accumulate that. So how our Monthly Medallion Club works, it is applicable to silver and gold, and we'll see. But there's a couple of packages there, and it's basically a monthly membership and purchase that you would do. If you sign up for the Monthly Medallion Club, the major portion of that monthly fee will go towards actual physical grammage of silver or gold. We're not holding a credit for you. It's not saving up money until you can buy an ounce. It is actually physically buying those grammages until it is a full ounce. As soon as it's a full ounce, you have the opportunity to either have it delivered to your door through the Fidelity system or to have it vaulted in the Fidelity vaults. That is your choice on the subscription of the Monthly Medallion Club. The bonus of being a Monthly Medallion Club member is that your vaulting is free. Your vaulting insurance up to R1 million of you stacking up to R1 million worth of product is for free. Your delivery will be deducted out of your package as it builds up. The cost is covered in there. It's a choice of how much a month you put aside or want to put aside according to these packages to start stacking gold or silver. And I think it's a very effective way to start saving. If you listen to Martin Ackerman and even Robert Kiyosaki and people globally have said, saving currency is not a clever strategy anymore. But through this, you can start saving and stacking and accumulating real money, real value, real bullion. So that's my exciting announcement. But there's another very, very, very exciting announcement that we are so proud to be making tonight. And I'm going to hand over to Dion to do that.
Oh, thanks, Ilse. And again, thank you, Wayne. It is sincerely appreciated. I mean, we partnered with one of the best companies, and it's been an amazing journey to this point. But this is the exciting thing. We have the first platinum medallion available in the South African market. Now, what that means, and I just really need to emphasize this, is Rand Refinery is generally the people that produce the Krugerrands. And they've been talking about a platinum Krugerrand or an ounce platinum Krugerrand for years, and they've just not been able to get it together. And, when I spoke about that mega trend, the green technologies, that's all tied up to, as I mentioned, silver. I wanted to jump into platinum because it's also a very fundamental metal that's going to be used in this new mega trend. Just a couple of things on platinum. I mean, it is an industrial metal. It's 30 times rarer than gold. And South Africa has the biggest deposits in the world by quite a distance to any other country. But the interesting thing with platinum is when I talk about that whole new trend that's coming forward, that we're talking carbon neutral, is, silver is going to be utilized in electric cars and all the other metals that will utilize that. But where electric technology falls short is on long distances, long hauls. So, of course, that's typically your trucks where they're carrying a lot of weight. As soon as you get a vehicle of that size, then starting to carry that kind of weight, literally, if it was a battery-generated vehicle or powered vehicle, a third of its weight would be its power source. So it's not sustainable and it doesn't make any economic sense. So, they've been looking into a lot of other power sources, and what this power source has actually been around for a very long time. It just never really took root, but it's definitely going to be part of this new trend, and that's hydrogen power. Now, hydrogen power is going to be in a lot of those long-haul vehicles and those kind of technologies. And again, this is the exciting thing, because traditionally, platinum, and I come from a mining background, and I experienced that big rush in the early 90s where platinum went through the roof. And there was a major demand in the AutoCAD sector where, of course, it's about reducing emissions and all those kind of things. Still going forward, that is still going to be required because naturally aspirated power sources will be around for some time. In Europe, I don't even think they will be around within the next 5 years because of the legislation that's been driven so hard through a lot of the governments and a lot of the what's the word? A lot of the legislation that they're actually implementing is actually going to be minimizing naturally aspirated vehicles. But that doesn't end there. Of course, they're going to be utilizing AutoCAD, and of course, that is cleaner technology. So platinum will be used there, but I see it having far, far greater usages in the new power sources coming into the future. So this is exciting. I mean, this is also available, and this is part of now, as you can see there. And when I showed this to my father, it was in a plastic bag, and he kind of looked at it and then put it aside. And then I said, Dad, you didn't actually see what I was holding. And I actually took it out of the packet and I showed him this beautiful coin. And as you can see, it shows all, it's a pity I can't really show the values there, but you can see it is triple 9.9 fine platinum. So as Ilse said, we've launched the Monthly Medallion Club, and now platinum is going to be part of that offering. So the great thing with this also, and I just wanted to expand upon what Ilse had said, is you as a profile, you would go on, you'd create your profile, you can have a number of subscriptions under your profile. So you could start to actually create wealth for your children, for your partner, for your family, and you could literally have 2 silver, 1 platinum, a gold, and you can choose the different packages that are going to best serve you. And as Ilse said, and I really need to reiterate this, every single month that your recurring payment goes off, you are buying physical grams of, be it gold, platinum, or silver. So say you get to a point where you want to liquidate off and you've only achieved half an ounce of gold. We will gladly do a liquidation for you, and we'll get based on the spot price of gold on that day. If gold's performance has gone up over that period, you benefit from that. So we really looked at this model, and we wanted to make sure that it's easy, it's accessible to everybody. And this is one of our biggest drivers as a business, is we want South Africans to get their wealth out of rands, out of fiat currencies. And this is a perfect way to start doing that. You know, we look at, and I just want to go into this quickly, as an investment, you can only invest 30% of your income or your wealth out of rands internationally. This is a dollar-based hedge. This is a dollar-based hedge that you hold locally. And the amazing thing is you can take 2 ounces and liquidate them today, or you can accumulate, and that's a great strategy where you can hold those, but you can choose to liquidate smaller portions. That's best going to serve you. So in closing, we're going to go into a Q&A. If there are any questions, we're going to more than happy answer them. If we cannot answer them, I do promise you we will come back to you and give you the information you require. But again, I'd like to firstly thank Ilse for opening it up and driving the business through and making sure that we get to this point. It's been exciting. There's been a lot going on in the background. To think that we're sitting here and it's like 7:45, I'm actually very happy right now.
There we go. Well, Dion, thank you very much for your elaborate and very, I think it's very critical information to be shared. And I would love to open the floor to everybody for questions. And Wayne, thank you so much for also joining us this evening and bringing the fidelity picture into play. I think the combination is what gives us the opportunity to provide an unparalleled offering and service to you, to the customer out there. So I think the easiest way to manage any questions would be if you either unmute yourself and just speak up, or I think there's a hand icon somewhere in the mix that you can raise a hand. We've got a question here. Hi, Dion, what is the expected growth for platinum over the next 5 to 10 years? Thanks, Justin. So, Dion, I think we can actually make a bit of another announcement.
Yes, Justin, thank you for that. And Justin is one of our investors, and he's taken to a lot of what we've said, and he is accumulating silver and hopefully now platinum. Interesting enough, I mean, we got an unbelievable resource in one of our associate partners who will be doing a full breakdown of platinum, where it's going, everything, in our next live presentation. So as soon as we are able to get through lockdown, we will be then breaking down the whole thing with platinum, and Bruce Williamson will be giving a whole talk on platinum and exactly what's happening with it. But Justin, simply, the growth is upwards. I can't give you specifics, but I will come back to you, and I will also post it within various groups if people do require that information. But the definite trend, and again, with all of the bullion products, is over the next 5 to 10 years, the growth is definitely moving on an upward movement.
Justin, I hope that answers your question.
Yeah.
Okay, perfect. Any other questions? comments. So happy to hear comments. As long as it's not we in for disaster and there's no hope. But if you want to share that too, you're welcome. Okay, Bruce, do you want to say something about the platinum since we have you on the call?
Yeah, I'll actually, Bruce.
Yeah, I think, I mean, just to say that because of what the auto industry did by moving away from platinum when the price was a lot higher than palladium, it's caused a massive, massive imbalance. So what we're saying is the auto industry, the mix that they put into the auto cats is more palladium weighted now. It has to have rhodium, and there's a massive shortage of rhodium, but they moved away from platinum. So platinum has underperformed in the last 5-7 years. It's picked up recently, but by and large, it's underperformed. Now, what the imbalance is caused because what the motor industry should be doing is to use in the auto cats a similar ratio to what is in the ground. And if you go too far away from those in situ, in the ground ratios, you're going to cause an imbalance. And so what we're projecting is that now over time, they're going to avoid the higher prices in palladium, they're going to have to move back to more platinum. And already I think the punters and the speculators have picked up, and that's caused platinum to have a run despite there being big surpluses. Obviously, as Dion indicated, there's a tussle between electric vehicles, which won't use PGMs, versus the long-haul, long-distance trucking bigger vehicles that'll probably go to hydrogen, which favors PGMs. So yeah, a little bit complicated in terms of what happens between batteries and hydrogen fuel. But yeah, it's very, very hard to ignore noble metals. You just have to look at a chemical element chart to understand that we are talking about absolute quality, and you don't just open new mines and produce more metal very easily. So yeah, pretty good outlook, you know, looking 5 years and beyond.
Oh, thanks, Bruce.
Thanks, Bruce.
You know, as I mentioned, Bruce Williamson has been in the PGM sector for Bruce, if I may, I think it was 40 odd years.
Bruce,
But the important thing,
here we go.
yeah, the important thing is we are going to have Bruce come on when we do our live presentation at Harton. We sat through one of his presentations, and I mean, we were just blown away at the depth of his knowledge and understanding of the sector. And for me, you know, as a business, and as you've seen, we have aligned ourselves with the likes of Fidelity. And, you know, we aligned ourselves with the likes of Bruce Williamson because of the depth of knowledge. I mean, his knowledge and his understanding of the sector goes way beyond most investment companies and what they understand about bullion.
Yes.
Bruce, are you there?
But another, yeah.
Yes.
Sorry.
Yeah, Bruce, just to give a little bit of a background, I mean, you've been in the PGM sector for what, more than 40 years?
Yeah, about, say, 40 years. Yeah, I mean, I've been in the mining sector for longer, but in the investment world since 1981. So I guess that adds to 40 years. And yeah, been watching and untangling the PGM sector and the changes and challenges that come their way.
Awesome.
Well,
Now,
Bruce, we're definitely going to have you on when we have our next presentation at Harton. So you're going to have your time to shine, and you're going to blow people away. And I'm almost certain we're going to have some more announcements of some other bullion products relating to the PGMs, which is also very, very exciting. Just a bit of a background on the platinum side. we have now aligned ourselves to one of the major mining mining companies. And I just don't want to announce exactly who they are, but they're probably the biggest platinum producer in the world right now. And we now have direct supply from them for all our platinum. So it's exciting. I mean, this is what we've just literally released now. I mean, these medallions were literally produced last week, Wednesday. So this is how hot these are right now.
Yeah, and we're calling it the DCX Bullion Platinum coin. So
yes,
taking it to the market. We've got 2 more questions from Rob as well. So Rob, to answer your first question, what are the storage costs and how are they calculated? So for the Monthly Medallion Club storage, that is within the Fidelity Vaults and as a perk to the MMC, Monthly Medallion Club members, that is at no cost. For once-off purchases, and I have to say this as well, I neglected to mention this. We have our bank, and partnered with our bank is F&B, and we have actually gone through a whole process of getting an e-commerce store up through our website. So that should be up in the very near future. They're just making sure that all the back-end development and processes and security around processing card payments and things are 100%. Then you should be able to literally order our products off the website and select whether you want it delivered or vaulted and all the terms and conditions around that. But the short answer, Rob, is depending on the value of your purchase over R1 million, there would be that would be a very specific calculation to incorporate the insurance and the vaulting fees. And then below the R1 million, we have a standard table. Like if you would take up a vault with any of the banks, there are some vaults that you can search online for safety deposit boxes. And with the partnership with Fidelity and their underwriters, which is Lloyd's of London, we have actually been in negotiations to make sure that we offer as a vaulting and insurance package is actually, I want to say, beat those prices. So you can compare it with taking up a safety deposit box, but it will be dependent on weight value. And that's why it's calculated specifically. But all that information will be on our website, or is on our website as well. So you can have a look. Lindy has just posted the Bullion website, dcxbullion.com, and there's all our products and offering you can have a look at. And I
Ilse, sorry to interrupt. Just on the back end of that, some information that you guys haven't been privy to, but that's come through this week, is we're actually, Fidelity, on the back of our discussions and a couple of other things that we're working on, we are building a new vaulting facility in the Midrand area. It is going to be one of the highest secured vaulting facilities in the world. And your products will be stored there going forward as well. So just some good news for you guys.
That is wonderful. Thanks, Wayne. That is so.
Thank you, Wayne.
We are steering ahead. And Rob, I hope that answers your question on that particular question.
But just to come in there, Rob, if as far as as Ilse says, it all depends on what you want to order. Please drop us a mail. We're more than happy to do a full costing for you, based on what you're requiring, which bullion you'd like to buy and invest in, be it delivered to you or vaulted. We can do a full breakdown to you, so it's completely transparent, and then you can make an informed decision also.
Yeah. And then, Rob, what commissions occurred at purchase and exit of the investment? And we're a standard retailer, so there's a very thin, slight profit margin on the actual product, but we are wrapping the whole deal up in a full comprehensive offering with a slight profit margin on there for our services and what we deliver. But it's not a commission scale of any sorts, where it's the more you earn or buy, the bigger or lesser the commission. It's pretty flat rates right through, and we try and keep our products very competitive in the market in comparison with other bullion suppliers. We make sure that our price range is within the standard market, and obviously it's about the price increasing and for you to hold that investment. And when it comes to liquidation, the standard in the market is you get liquidated, paid out according to the price, the spot price on the day of request for your liquidation. And there's a handling fee, but no commission on the payout. So it's a simple admin processing only. Dion, I don't know if you want to add something.
Yeah, just to expand on that, I mean, with any investment, I mean, if you take out a retirement policy or things like that, you know, there's certain times if you choose to you know, pull your investment out earlier, there's always penalties. Now, the nice thing with bullion is, yes, there is a difference when you, from the value of what you buy it at to when you sell it. And that's the difference is basically the manufacturing cost. So that's why I always say to people, if you're investing in bullion, it's a mindset. It's changing why you're doing it. And the important thing is, firstly, we're looking to get our wealth out of fiat currencies and put it into a commodity that holds value over a long period. And as I said during the presentation, if you're looking to invest in the short term, you're not going to realize the real value of this. This is a long play. So we're looking at the 5 to 10 years where you, through that period of time, are continually adding to your investment and growing your bullion investment. But yeah, I think that's essentially what it really comes down to. When you choose to liquidate it, we do liquidate it, and we can do it within a 72-hour period where it would go straight into your bank account once everything's been verified. If we are the holders of your bullion, it's even quicker.
I think the only thing that we might need to just highlight here is there's a big difference between if you look at the markets and you look at spot price and what we call paper silver and physical silver. As Dion said, there's manufacturing cost involved in getting a physical product to you. So if you compare the standard spot price that we're talking about to the price lists that you would get from a bullion supplier, there's a difference in the price, and the difference is the manufacturing and the cost that is to not have it as you know, it's not a paper future that you hold a share in some silver somewhere. It is actual physical bullion. So that, but I think most people on the call here are very much aware of that. So I see we've got 2 minutes to go. So on that note, I want to check, is there one last question? If there's a question, squeeze into the 2 minutes. We'll see if we can answer it in 30 seconds.
Just with Ilse, just with regards, and maybe you can clarify this, I'll ask the question, is if I want to purchase some bullion tonight based from this, how do I go about it? So what is the way, if I want to look at firstly the Monthly Medallion Club as an option, and I saw Justin mention, can I get more than one subscription on his profile? How do I do that? And then if I actually want to go and buy bullion, so I'd like to buy some 2 kilogram bars and so on and so on. How do you do it?
Okay, so as I said, you can have a look at our website where you can see the product and everything, and we should have, there would be links on there where you can click for order now or subscribe now and do an electronic form. But what we will also do, since we want to share the videos with you, and again, apologies for the non-connectivity on that side, but what we'll do is we'll send out a thank you email to all of you with the video links as well as order, so the order form. If John talks about a straightforward order, if you want to buy the 2 kilogram bar silver or a medallion or something, what we will do is with our manufacturer, we've arranged that every day we do a price lock. Some of you are on our WhatsApp group where you receive the price lock, daily price lock, and it's daily because of the fluctuation in the price. And it might change tomorrow morning as well, but we will keep, if you want to place an order for actual product tonight or early tomorrow, we will keep that bullion price that I think we'll email it out. Now, Dion, it's the bullion lock price lock of this afternoon, correct?
Yes. So it was the same price lock that we did this afternoon, and our manufacturer and Rand Refinery have guaranteed that until this evening at 10 o'clock is the cutoff.
Okay. Yeah. So but what we'll do is we'll process it tomorrow if you want to place that, and we'll honor that pricing, unless the disclaimer is unless I don't know. I don't want to say Osama bin Laden hits again and something in the world shifts dramatically tomorrow morning where there's a fluctuation of more than, I'll say it loud and clear as a commitment in a contract. If it's more than 5% up or down, we have to adjust the price accordingly. But within that range, up or down, we will honor the exact price of the price lock that we will email to you now that you would have received this afternoon. And that would be for any orders out of this webinar. As far as the Monthly Medallion Club is concerned, those are fixed packages. And we'll send you a form if you want to sign up for that. We made it as convenient as possible so that you don't have to print out and fill in and scan back. It's a protected document where you can digitally complete it, or you can digitally complete it through the website digital form, but we'll send you that link as well. So I think what we'll do is send you a thank you with all of and everything and all the information there. Should you want to action anything immediately, it is there. Dion, I think you wanted to say something.
No, I'm good.
Okay, just last one, do you have an option to safely ship and store offshore? Now, at this stage, we only have the local Fidelity vaults in country. But Rob, that is also, it's not impossible. Through our manufacturer, we are in touch and connected to a whole network of vaults globally and suppliers globally. So we would probably be able to facilitate that, but it's not an offering that we're putting on the table right now.
Yeah, just to expand on that, I mean, we have got ambition to take the business more international, but our focus right now is South Africa and the South African market. But as Ilse said, I mean, there are options. If you are looking to do something, we're more than happy to assist you through our contacts and our associate partners. We can definitely assist you to look at those options.
But it also comes with other regulations to comply with. Yeah. It's not necessarily straightforward. But I hope that answers everybody's questions. And now we are a bit over time, but thank you once again for joining us. Really, really appreciate you sitting out through all this time. And as we repeatedly said, we would love to see you face to face in the future, but hopefully this was a fair enough substitute for now. So have a lovely evening and thank you once again.
Thank you, everybody. Take care and God bless. Good night.